this opportunity to basically run through where we started and then also address some pitfalls, especially within the last 2 days. Some of you have been sending me screenshots, and I kind of see somewhat similar mistakes that a lot of you are making already. So I'll address that. I'll address that pretty soon. So yeah, we started talking about what 5 processes or steps that we'll be following in terms of how this trading, how I do my analysis on the market. Number 1 was what? Top-down analysis. Number 2 was market structure. 3, trend lines, which I told you about the third touch. 4, Fibonacci. And then today we're going to talk about the candlestick formations. So it's a process, right? Anytime you're looking at the market, have these thoughts in mind, have these processes in mind that you start. Yeah, I'm supposed to also send you guys a link with the top-down analysis in terms of the levels. I've not forgotten that. And then you look at market structure, looking at who is in control, high, 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 low formations, lower, high, lower, low formations. And then we look at what trend lines, specifically concentrating on the third touch, and the Fibonacci, how it comes in confluence with the trend line. And then now we're going to talk about candlestick formations, which gives us the basis to want to relax or enter a trade, right? Today, I was randomly watching a video on YouTube about one guy in South Africa who was doing one analysis, right? He was running an analysis, and he actually was watching a particular market that hit some level, right? Let's say, what can I even use for that scenario? Let's say an example would be this. I'll show you guys pretty soon. So that guy was pretty looking at the chart like this. And then he's a very popular guy. A lot of people follow him. He's got like huge followings, right? So the market hit this level, then he started doing what? Shorting the market from that range, right? Started placing sell trades, right? Expecting this to just act off as what? A resistance and then start dropping off, right? I used to do this. Is it ever blue? No. No. Why would you think that is him? I didn't even attempt mentioning any name. He's a South African anyway, if you just are curious about it. He started shorting, and then what can you see? Obviously, the market would traded up and took him out. So he was explaining that, yeah, I thought this was going to give me confirmation, blah, blah. And I was basically looking at it and realized that, okay, indeed, this guy didn't look out for any candlestick confirmation to give him some basis of what bearish control or any reversal signal before he started shorting. So obviously, it is bound to happen that you sustain some losses if you're looking at the market like that, right? So now we're going to look at the market. First, let me also address the pitfalls or the mistakes that I see a lot of you doing already, right? If you look at my trend line, my trend lines are drawn in a convergent manner, not in a parallel manner or in some other way that I see you guys doing already. So when I say convergent, hold on. When I say convergent, what do I mean? You can see that my trend lines are usually from the bottom to the top like this, or from the top to the bottom like that. Why? Because the market moves in waves of what? Higher high or lower high. You don't see me drawing one trend line like this and then another trying to connect the highs from the top like that. That is you trying to draw a channel or something. I don't know what that is, but I don't remember doing that in any of our scenarios, right? So what I mean is, I see somebody will draw some trend line and start from somewhere like this, and then send me a screenshot and say, Kojo, yeah, I saw the trend connecting here like that, so 1, 2, 3, third touch. No, you are just trying to formulate your own third touch. This is not my third touch. Probably you have to also write a theorem about it and start taking trace from it. But that is not it, right? So I said, what the trend is basically the inception. The trend is basically the inception of the market. So we're looking at the market just what starting from a starting point, going up, whatever it is doing, right? So you always want to look at the trend from the bottom, running up, or the market is somewhat trading all the way from the top, coming down like that. So you also want to look at the trend line from the top all the way down like that. So at the end of the day, we have what? The resistance trend line from the bottom to the top, and then the support trend line from the top to the bottom. You don't have to connect the in between dots of what and say, okay, this is the trend line or something like that. That is a very wrong way to do what we are doing. Is it clear? Is it clear what I just did? Right. So I don't want to see us repeating that mistake. If you don't learn it from here, you're totally lost in the whole process, right? If you didn't get what I said, then you're totally lost in the process, and that will hurt me to see somebody drawing the trend line that way, right? Now you try and connect the trend from maybe some internally like here and say, yeah, this is the trend line. No, it's outer space of the market, right? Not the internal levels, right? So if you want to draw a trend line from here, you start from here, point 1 here, point 2 connected on the outside. If you want to draw a trend line from the resistance, zoom out, see if there's any point on the upside, right? Which is like these regions here. If there's no region here, if there's no formation there, then that's where you can pick this one as your point 1, right? And if there's something there which I'm trying to zoom out to see, then we will see if we can connect that one instead as point 1 and probably connect it to this as point 2, right? It's still loading though. My internet is a bit lagging today, but yeah, that is, yeah, so we'll just load it. So we'll zoom out and see, right? You can see what is a huge level for all the way from the top to the bottom like that, right? That's pretty huge though, right? But let's see how it has acted. Clearly, you can see that even though it's so huge, all the way from the top, point 1, point 2, point 3, managed to somewhat play out, right? With a little bit of tap, but yeah, that is just what the rule says. So you don't have to worry about how and why it is doing that, right? You can see that all the way from the very, very, very top when I zoomed out, right? All the way from the very top, we had here as well, point 1, as you can clearly see. and then here as well. Point 2, and obviously we tap into point 3, and then started rejecting, and then the market made a move on the downside. Yeah, it's just how it works, you know. If you don't have to stress about why it is working that way, just take advantage of how it is working that way. You get it? So here, even though it has come to very close to that very pinnacle point in the market, so the move would obviously not be a huge one, but at least it provided some level of opportunity. It provided some level of opportunity to make, some few pips, even though it wouldn't have obviously been the easiest of pips to make because of these spike down, spike up, spike down, spike up, right? Very tedious to stay in this position. Nonetheless, if you're following the rules, then at least you made some 70, 80 pips, right? But obviously, like I said, it would have been a very tedious position to stay in. Yeah, please, I'll pick your Fibonacci too. The Fibonacci is just here. Which one? One of them is just around here. Yeah, this one here. You see Fibonacci retracement. If you put the star on it, a favorite, it's there. It'll be part of the ones that are always on the screens, right? So you can pick your Fibonacci from that point. Yeah, so I just hope that I have emphasized so the thing about inner trend line, let me also break that down clearly enough, right? So don't make inner trend line sound so horrendous or complicated, right? So we have what the outer trend line probably acting like this. Wave 1, wave 2, wave 3, right? You can see like we have the market just moving up, down, like that, right? So you can see that here was what a swing point from here. Let's call this one what A to B, right? But sometimes this A to B wouldn't just move straight like I did here, right? It could move like what A, B, C, D, something like this before it gets here. In that way, even though we have what here acting as what the outer trend line, which is point 1, 2, 3, right? We have here acting as what inner trend line, where we can draw point 1, 2, 3. You see that? So here the rules to what applies, and then you can find some intraday trades here or minor swings here, right? To catch a trade on the upside before when this outer trend line, inner trend line get broken, then the market can seek to approach what this outer trend line here. So that is just the definition for the inner trend line and then the outer trend line. So even the same thing with this, sometimes it won't just go all the way up like that. It will just be making a little bit of waves on the inside, and then you can connect those as what the inner trend line, right? So just get the picture from that point. That is what I mean when I draw the inner trend, or you can call them the counter trend line, right? Or the inner trend line. I don't think we have any scenario like that around here. I would have shown you pretty much, right? But they do occur a lot of times where a swing point just makes with a couple of inner trend line before it hits a particular point when the outer is still there, right? So like something like this, right? This is an inner trend line, right? You can see that here, point 1, point 2, and then we extend it. You can see what, even though it didn't come somewhat close to it here, we would have expected this to come what somewhat a little bit close to tap into it, and you have realized that we have what. So this is what that scenario. Sometimes it does tap into it, right? Like sometimes it does, so taps into. So that's that. This range accounts for that inner trend or counter trend line, where we have a point 1 from the down to point 2, and then we are still waiting for somewhat point 3 along the line. So even though we are waiting for point 3 along the line, you can clearly see that what we could have still made what some trade here if indeed he had tapped into it, right? And then it gave us a good confluence for a long. We could have still made some profit there before that outer space gets touched. You get it? So yeah, so that is the clear difference between inner trend line and then an outer trend line, right? Um, this would have been a very perfect trade if not for the fact that we had this in there, because if you could affect the, you can see we're rejecting somewhat on the 70% retracement, but somewhat a very good trade. Just only that we came a little bit shy of the trend line, but still we have some candlestick confirmations here, which is what the evening star formation, and then you could have taken a risk entry on it, put your stop loss right beneath if you're so confident about the move, and then you still would have made a good amount of pips, which is about 100 pips on this trade, right? So yeah, that's just a risk entry because you may not have the most solid confirmation, but um, things are still glaring. And then, like I tell you, the market isn't always going to be acting succinctly perfect for you. Sometimes it gets a bit shy from um, respecting all our anticipated zones, but you have to act um, sometimes smart, right, in your own vein, and then it comes with experience. But yeah, with this being said, that clearly explains the concept of the outer trend line and then the inner trend line. Give me a second, let me grab some water. Then we'll get on with the candlestick formation, which is exactly the main thing for today. Oh, yep. So let's continue. So far as we've come, now you understand what to look out for. Pretty straightforward, basic understanding when to look out for position to find an entry for a buy or a short, right? One question we can trend now false break. If you're a strong close above break or candle break. I don't get your question. But if it's about the break, I taught you exactly what to look out for on the third touch, right? Um, Now upon each of our entry criterias, right? Now let me list out clearly what our entry criterias are. Number one, you may want to be interested in taking a trade on um, any of our key levels, which are called the psychological levels, right? You want to take a trade based on fib retracements. You want to take a trade based on third touch. And you may want to take a trade based on what? Additional support and resistance, right? So it could be a key level, psychological, fib retracement, third touch of a trend line, or the traditional support and resistance, right? So what do I mean? Key level, like something like this. Let me get a clear picture for us to understand this, right? So if I'm using this scenario, right, a key level could be maybe the market hitting 5400, right? We could find a confluence to decide to take a trade here. Cool. If we miss that, we could use a Fibonacci retracement to find what a setup here. Cool. If we miss that, we could use what, let's say, all things being equal, this one touch, a third touch of a trend line to find a trade there. Cool. If we miss that, then we say what support or resistance here is acting as what a previous resistance. The market run back there as another resistance that could also act also as a confluence. At the same time, is what a key level, psychological level again, right? So you can see what all the time we have a succinct basis of entering the market and not just any point in time at all. We just want to buy here, sell here, right? So watch out for these four things that I've spelled out clearly, and then anytime you're doing your analysis, make sure they come in play before you want to take a chance on the market. I would avoid the market if it is not really playing a major role, or it's not really coming in confluence with any of these things that I've outlined, right? If the market is not. So this pair exactly gives us the perfect way to describe what I just did. Like I said, when we have a psychological level here, I may want to take a trade based on this. Fibonacci retracement, if we plot a fib on this, right, we could see that we were probably retracing in the 61.8 level thereabout, right? From here to here, you can see the 61.8 acting off before that left off again, right? So that would also serve us with a good entry point. And then again, what we said, a third touch, even though this one didn't act perfectly, I'm just using it as a scenario where, let's say, all things being equal, this acted, then would have used that as what, 0.1, 0.2, 0.3, to find that trade to go up, and then that would also suffice for this. And the fourth one is what, support resistance, right? Resistance, come back into the resistance, look at for how price action reacts there, and then you can if you go to short, right? So all the time you're looking out for these four things before you take any trade. At least one of them should be your reason before you take a trade. That's what I mean. At least one of them should be your reason for taking a position. You can't take any position when none of them is making sense, right? You can't just wake up and take a position, buy or sell anywhere when none of them, right? If I take a buy here, obviously the confluence could come from me seeing that this level is trying to act as what, a support, which is the basically traditional support that we all know, where the market hits a level, goes up, comes back into that level, we expect it to rise up again, right? It's just me taking a trade from a support. If you see me selling from here, then it could be me acting on what's the psychological level, right? If you see me also buying from here, it could be me acting on what the psychological level. So there wouldn't be any point in time where I'll just be buying, selling randomly when I don't have any of those four steps or four processes that I've listed making sense, making somewhat a good amount of sense, right? So yeah, take note of that. Now, upon those four criteria that I've given you, before I take the decision, right, unlike my friend from South Africa who just took that trade and then he got run over, I would want to wait for what, some level of confirmations before I pull the trigger. I would want to wait for some level of confirmation before I pull the trigger. Why? Because at least it gives me some surety of bullish presence or bearish presence in the market, and it's very important, right? And that is what produces what we call an edge in the market, right? Edge. Because if the market just hits a particular point and then you're just trying to buy just because you're in a support level, so you've not developed an edge yet. You're just doing everything like everybody else, right? And then edge is what will actually let you start making money. Hold on. Edge is what will actually start making you to make money. Without an edge, without an edge, you cannot make money in the market. You would be okay, right? Where today you could make money, tomorrow you lose money. You'll be balancing in back and forth like that. You wouldn't have that confidence to say I'm a profitable trader in the market or like go all out, right? Just like I call the totis posis, right? Where you are so confident that this move is going to go in my direction, so I'm going to stack on positions relatively huge than my regular 1%, 2% on the market, right? Where sometimes you go out of your way to risk 5%, 10%, 15, even 20% if you so wish, right? It's all up to you, though, right? But you would need to build that edge, and that edge comes from what? That confirmations in key areas before you take a position, right? So at a point in time, right, in my journey into trading, I wanted to always ask myself, like, how could I tell at every pinnacle point of the market, right, whether it's a support level or resistance levels, right, what could give me an early indication that this market is about to reverse from here for me to have a position on, right? Like here, I'm trying to like ask myself within this relative small range here, what could give me that early indication to buy here or early indication to sell here, right? You can see what I'm doing. Early indication to sell in any of these regions, early indication to sell here, or early indication to buy here, or could give me that information. So it was what the whole question that I seek to solve or to answer, right? So yeah, upon just throwing that challenge to myself or that dilemma to myself, then I realized that one of the best ways, we've not even talked about it. Somebody said, how do you know when to take profits? You don't even know how to take the position yet, and then you're looking at how to take the profit. How can you think? How can you think about taking the profit when you don't even know how to take the position? Right? We'll get there. Don't worry. So, like you can see, this is basically a market moving what swing points, right? Just moving in random swing points. You're just asking yourself, how is this market just going up and down like that? And then they are huge moves, right? If you look at this, they are extremely huge moves. Here to here is about 280 pips or 90 pips. Here to here is again 290 pips, almost 300 pips. Here to here, almost 370 pips plus, right? Back and forth like that. Another 180 pips, another what 260 pips, and so on and so forth, right? So if you're able to catch, imagine that all these moves that just occurred in euro, New Zealand dollar, right? Imagine that all these moves that happened in euro, New Zealand dollar, which started from this is 3rd of September, right? September, October, November. We're currently in November, right? So you can see that what 3 months. This is Euro New Zealand movement in 3 months, right? All on the 4-hour time frame, 3 months, right? And this is just one currency pair out of what the numerous ones you'll be looking at. So imagine at least even for the 3 months catching what just 2 or 3 of these swing moves, right? So we have, let's say, even if you started from here, swing points 1, 2, 3, 4, 5, 6, 7, 8. Averagely, you should be able to catch like maybe two, right? At least two. Or even if you're so good, then you could catch what three of these moves. Even if you're able to catch three of these moves, right? Whatever your account size is, and then wherever you decided to capitalize on that move, right? Let's say you're going long, right? You caught this move here, and then with the patience, you decide to hold that trade setup, right? And then you make what that 377 pips or something, right? You should be what extremely proud of yourself for coming this far to be able to take such a great trade setup. Or if you caught this one, right? Which I did, right? You guys know that I caught this one, right? I caught a couple of the moves here, though, right? Not just this one, a whole lot of them, right? Back and forth like that. I caught this one here, and I caught the sell as well, right? And I still have a small position of the sell running. I don't think I closed everything out. Let me check from here. I still have a small position of that sell actually still running. Yeah, let's try to load. See if I can send you guys a screenshot. So with that being said, then I started asking myself what kind of early confirmations or what kind of decision making criteria would come here for me to take an entry. Then I started reading about candlestick reversal patterns, right? I started reading about candlestick reversal patterns. I'll send you guys the screenshots. I'll send you guys the screenshots in the group. I think I even posted that to it in the community. So let me just pick that picture from the community. So we use it as a basis to learn. Yeah, so I just forwarded that into the group, right? And even with this trade, I made a little bit of delay in my entry, but I still knew that I had huge potential, so I still went for it, right? There you guys can see from the group, Euro New Zealand dollar, where I had my entry before that drip, right? Right from here, and then what held that trade all to here, right? You can see from the screenshots. So you may want to ask yourself, what gave you the indication to sell here? That is what we are coming to look for, right? What gave me that indication to sell them and then have that strong confidence that we were going to drop and come down like that, right? So, like I said, I started looking into it. Candlestick formations for reversal signals or reversal formations, right? As you may want to call it. So eventually, eventually, after so many research readings and then back testing, I came to identify certain things that worked for me, right? So I came to identify what are called the bullish reversal signals and then the bearish reversal signals. So what do I mean by bullish and bearish reversal signal? So the market is in bullish, then obviously we will go higher high, higher low formation. Right? And then if the market is in bearish, we will go lower high, lower low formation. So if I'm talking about bullish reversal signals, they are any candlestick pattern or indication that gives us indication to buy or from what higher low formations, before we make up a higher high, right? So here as well, we'll be looking for bullish reversals. Here's where we'll be looking for bullish reversals. Here's where we'll be looking for bullish reversals, right? But even if the market tends to make what an equal low before we're trying to see if it's going to push up, then we'll still be looking for bullish reversals here to confirm if indeed we're going to go up. So anytime we're trying to look for a buy, we have to be looking for bullish reversal. And then anytime we're trying to look for a sell, then obviously we'll be looking for bearish reversal for the lower high, right? The lower high formations. We're looking for bearish reversal signals from the lower high formations. Or if it's even an equal high, right? We should be looking towards bearish reversal signals from those equal highs, right? So have that clearly printed in your mind that high information we're looking for bullish reversal, low information we're looking for bearish reversal signals. Now let's quickly go into the chemistry patterns. So there are so many chemistry formations, right? About 50, 60, maybe even 100 of them all over on YouTube, right? So I took so many years to read around them, backtest, and find the ones that are recurring enough. Find the ones that are extremely recurring enough and do what? Sort of build my trade confidence around those ones, right? Or build my edge around the recurring ones and then employ them as part of what my strategy or my decision making to take a trade or not, right? So after a thorough research and then reading, I came to settle on 6 main or in all 12 main candles information. 6 from the bullish and then 6 forming the bearish reversal signals as well. So we're going to look at each one of them one by one, right? Starting from the bullish. So number one, I want to look at what we call the hammer formation, right? The hammer candlestick pattern. So how does the hammer look like? You usually have a head and then a wick on the downside like that, right? And then on number two, we have the inverse hammer. So inverse hammer. And then it's opposite of this one. So you'd have the wick rather from the upside and then the head like that. That's inverse hammer. And then number three, We have the morning star formation. The morning and star. So usually the morning star, you have what? A bearish candle. So here I'm going to represent the bearish candle by red. A bearish candle that pushes the price down. Now usually you would have what? A small, it could be bearish or bullish candle in the middle like that. Usually it doesn't really matter. But subsequently, you have what? A bullish candle that comes what to push price somewhat up like that. So basically, it's a three-part information, unlike the other two that are listed, right? So 1, 2, 3. Then you see that we have the evening star, morning star formation. Then number 4, what do we have? We have the tweezers. This time for the tweezer button. So you have to sit down to learn these patterns in your mind. So tweezer button, you have what? A bearish candle which will push price down like that. And then subsequently a bullish candle of almost equal size that pushes price back up like that. It's called tweezer button. And then number 5, we have what? The bullish engulfing candle. Bullish engulfing. So how does the bullish engulfing look like? You usually have what? A small bearish candle which gets engulfed by a bullish candle. And then the last one, which is number 6, we have what? The doji. It is usually a long candle wick with what? A small body or something, no body at all in the middle like that, right? So anytime I'm looking for a buy, I'm looking for the market to come in conference with these patterns, right? Right. And then when I say these patterns, I mean a cluster of these patterns, right? So in certain scenarios, right? So now after that, I'll tell you something. In certain scenarios, I could take a trade based on just this confirmation alone, or based on just this confirmation alone, or based on just this confirmation alone. But with any one of these ones here, I don't take a trade on them alone. I would need them as a confluence, right? ABC, one of these, two of these, three of these, right? In the same area, or this one mixed up with this, or this one mixed up with any one of them, the same with this, before I may want to consider taking a position. But for these, and this, sometimes when they stand alone, I can take a trade on them because they are very strong reversal signals as to these individual ones here. Right? Remember, these are a 3 candlestick formation. This is a 2 candlestick formation, 2. And this one a single candlestick formation, right? So I sometimes base my decisions stronger on this one alone rather than just this one standing there or this one standing there. So take note of that. Remember that I usually trade from the 4-hour time frame, which also means that every single one you see takes 4 hours. So you may take what 1 4 hour, another 4 hour, but here you take what 4, 8, 12 hours. Right here is going to take 8 hours, and going to take 8 hours for these patterns to be formed. So relatively, these 3 are strong enough than just these single ones you're seeing. So just have that at the back of your mind as well, right? Just have that as a tip at the back of your mind. Now I'm going to leave this here and then we go quickly into the bearish patterns as well. So the interesting thing about the bullish reversal and the bearish reversal is that initially when you join they look the same, but the name changes based on the position, right? The name changes. So here, rather than you'd have the same candlestick pattern, right? Looking the same like this, right? Because we're looking for this at lower highs, right? Lower highs, which is like what those lower high formations, not rather a higher low, right? We're looking for this at lower high formation. Because of that, the name is not a hammer anymore. The name is what a hanging man. A hanging man. And number two, we have what that inverted sort of hammer, but this time because we're looking for it again at a lower high, right? Remember when I say lower high, I mean this. So here it will look like something like this. If you're looking for it from a position like this for a buy, it would rather look like something like this. So they are the same thing, but based on the position, the name was change it. So here with the shooting star, but here it was inverted hammer because it's a hammer will be doing this here. By hanging man will be doing this here. So try and picture that, try and get that picture entered in your mind. Because here you're looking for a trade for a short, and here you're looking for a trade to go long. Right? So this one is a shooting star, this one is a hanging man, but here is inverted hammer, and then this one is a hammer. Right? The patterns are the same, but the name changes, right? Somebody says they can't hear me. Is it real that you guys can hear me, or it's from the person's computer? And you try to speak as loud as possible. I have my microphone very close to me. Okay, somebody says the sound was low. That's fine. I'm checking my sound. My sound seems to be very good from my end anyway. So you should also check yours again. Hello? Yeah, it's very clear here. Right. So we're moving on. Number three, rather than morning star, we have what? Evening star formation. And how does the evening star look like? Opposite of the morning star. Here we have what? A bullish candle that would push price up. And then we could have what? A small bullish or bearish candle in the middle like that. Right. And then subsequently we have what? A bearish candle that tends to what? Push price down. And we have number four, tweezer top, right? Also, opposite to a tweezer bottom, a bullish candle that pushes price up, and subsequently a bearish candle that reverses that bullish move. And then number five, we have what? A bearish engulfing. A bearish engulfing. How does a bearish engulfing look like? You'd have a bullish candle that would also push price a little bit up, small bullish candle, which gets engulfed by what? A bearish candle. Engulfing, it covers it up, covers it up. So tweezer, the difference between tweezer and bearish engulf is that tweezer almost have what? Equal height, but bearish engulf, you have a small candle and a big one that comes to what? Engulfing. And number 6, nothing changes here. It still remains what? A doji. Doji is still a doji. So you can find doji at the bullish reversal range or bearish reversal ranges, right? So yeah, these things are what should be the preamble predominantly for taking a trade after all your confirmations align, all your zones are set and everything, right? After everything aligns for you, these are where would come in handy to help you to make that decision if you want to buy or sell or do whatever you want to do, right? The only difficult thing, right, as everything, you can have it all perfect. The only difficult thing about these confirmations, right, in confluence with the way we trade is that you want to ask yourself, how many of them should you see before you you make a move or before you take a decision, right? Do you enter the trade after the last candle complete or during the formation class? I always wait for the candle to close. Indeed, if the candle doesn't close, how are you going to know that it formed a hammer or it formed a shooting star or it formed this? Remember that we take entry based on the formations. So you don't want to just take a trade in during the course of that formation because the market is very tricky. It can change at any time, right? Within even the last 5 seconds, a whole candle that was bullish can become a bearish candle. You have no idea what can happen in the market, right? Somebody says I should go over the hanging man and the shooting star. So yeah, the way I was explaining the hanging man and the shooting star is that if we're looking for this, we're looking for bearish reversal signals, meaning that we're looking for a market running with lower high, lower low formations, right? So here we're looking for entry from the top of the range, right? Top here, top here, top here. Right? If we're looking for bullish reversals, we're looking for entry from the bottom of the range, bottom here, bottom here, bottom here, right? So bull, bears, bull, bears, bull, bears. If you're looking for what a pattern of what the hanging man here, this is how it would look like. And then this is how a shooting star would look like. But if you're looking for a bullish signal with what a hammer, this is how the hammer would look like here. And then inverted hammer, this is how the inverted hammer would look like. So you can clearly see that this sign is no different from this one here. And then this sign is also no different from this one here. But because of the zones in which they are, right, where we're looking for a buy here, but here we're looking for a sell here, the name just changed, right? Now, I don't know why they decided to name them like that. All I know is that when you're looking for these kind of patterns in the bullish range, then now this one is for the hammer, this one's called inverted hammer. If you're looking for this in the bearish range, this one's called the hanging man, this one's shooting star. You have to take it as it is. I heard about Maribozu, blah blah blah. Clearly, I told you that there are thousands of reversal signals, but I don't take interest in any one of them. So I taught you exactly the ones that I have back tested and almost always used in my entry. So if you want to go ahead with your Haramis, Maribozu, that is a job for yourself. But as far as I am concerned, these are the only ones that I take interest in, right? So you may want to do your further readings into any one of them that you wish. But as far as you are learning from me, this is what I have for you to take. So yeah, that is the difference between the hanging man and then the shooting star, right? I think you can name this yourself. That's up to you anyway. Yeah, you just have to know the functions, basically, or how they mean or the implications of them, right? So yeah, now you guys need to take notes or whatever it is, right? Um, you guys need to draw them, take screenshots, whatever you want to do, and then learn them, right? Yeah, before I even that question came, I said the only difficult aspect is that it's sometimes difficult to tell how many confluences of this should you see before you take a position. Should you see just only evening time take a position? Should you see hammer, this, and this, and this before you take a position, right? If I had answered to that, my strategy would have been a holy grail, right? It means that I may never be wrong in the market, but that is the only setback in the strategy, right? Where you cannot always tell exactly how many confirmations you should see before you take a setup. So with experience, it will start like sinking in, right? The more you're practicing, the more you're taking trades, the more some are failing, the more some are working. You'll start sinking in, and then sometimes your gut feelings will even start working with you. You know that no, guy, you should wait for this next setup, or you should wait for another confirmation, or you should take this leap. So yeah, things will start making sense to you. Yeah, these are the kind of confirmations I look out for. So I'm going to clean this and then look at the real world scenario, right? I'm going to clean all these now. I'm going to clean all these now. So now you want to do yourself that honor of just like I've done here, taking that time to backtest turning points and then the kind of formations you can identify in all those turning points, right? So if we take the ones that I just even did here, right? What kind of formation would this be? Obviously, what? An inverted hammer. What kind of formation would this be? Obviously, a doji. Then what kind of formation would this two be? A bullish engulfing. Right off from there, what happened? A steep move on the upside. Can you see that? If you guys can recognize that, means that you didn't take notes. You see that you didn't take notes, or it hasn't synced in yet, which it will as time goes on. So look at this reversal zones and tell me. So here you can see what there what a bearish, big bearish candle, continued bearishness, bearish, 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 bearish. Then we have what a little bit of what bullish candle, which closed what as a reversal sign that we know, right? Which is what an inverse hammer. So you're gonna ask yourself, should I just take the trade on the inverse hammer? I told you what I don't like to take trade based on just that one confirmation, right? So you want to what wait. So here is going to take what a whole 4 hour to close before you know that indeed this candle close inverse hammer. So if you want to see how the next one closes, it means that obviously you have to wait for the next 4 hour session. So it's a game of waiting, right? So 90% of the time I'm waiting. It's only 10% of the time that I actually trade in the market. The next one is what? A doji, right? Then you want to ask yourself, is it enough to take a trade based on the doji, right? And then next one, we have what? Another bearish candle that even pushes the market a little bit further down, right? And then a bullish candle that comes to engulf that bearish candle, right? So personally, if you want to ask me personally, with experience, I always want that bullish presence, a final bullish presence. So after any trade that I take, I'll make sure I have what a bullish candle that gives me what that bullish confirmation or bullish presence. So in a trade like this, I would want to see this bullish engulfing before I would have made that decision to want to actually buy Euro New Zealand from this range for a push up, right? For a push up. And indeed, if you did that, then how much in pips would we have been looking at just from buying from this closure here to the top here? So in the next 8 hours, they would have made about 150 pips already, right? Would have made about 150 pips already. Mind you, the person that is recording that you cannot share my content, right? It's just for educative purposes, right? You cannot, and you dare not want to do that. Sharing it on any platform, YouTube, or spreading it across. If you want to share it among your colleagues here, that is allowed. But other than that, it wouldn't be taken lightly at all from my account. Yeah, if we're looking at these regions as well, which has to do with the bearish reversals, right? You can see that we're pushing up, then subsequently we have what this kind of what a shooting star here, right? But again, it's not strong enough for confirmation to want to take a trade on. Secondly, we have what this kind of what a little bit of a shooting star doji, right? Remember that candlestick are not entirely perfect, so some of the patterns maybe a little bit tricky looking alike, right? But yeah, you have to deal with that. Then we have a doji here again, right? So here we have a 1, 2, 3. This one is usually what I'll call that risk entry, because still we are at the very pinnacle of the market, right? At the very top of the range. If you take your shot here, obviously the safest place to put your stop loss would be above this wicks do anyway, right? But obviously, like I'm saying, it's a risk entry because you have some bearish presence, but they are not like extremely strong, right? But if you wait for this candle, then obviously you have a bearish engulfing because it's going to obviously engulf with all those bullish moves, right? And then it becomes with somewhat a strong confirmation. But with this kind of entry, then your stop loss still has to be above the range, which increases your risk though, but it is what a strong confirmation entry. You get it? So here, if you decide to take your shot from here, put your stop loss. Maybe you want to use your stop loss by pips or by was it structure. If you're using structure wise, the stop loss will obviously be here, which will be somewhat huge. If you're using by pips, your stop loss will obviously be maybe above the last week or something, right? But nonetheless, if you did take that trade, then you would have made was it about 100 pips from here. But if you took that trade from here, then you would have made what about 125 pips, right? So there's a little bit of margin of a difference from that point. You can see that when we quickly push down, and then we push back into that range again, right? So from pushing back into this range, we would manipulatively spike up here before pushing down. But upon that push down, the next closure, then we have what a bearish candle again. So here, these two patterns come close to what we call that tweezer top, right? So you have to have a very open eyes when you're dealing with candlesticks. What is this thing here? Taking a little bit of time to clean. Yeah, so here we have somewhat something that comes close to a tweezer, right? Then again, subsequently we have another one, sort of a tweezer, right? And then we have what a hanging series of what a hanging man, and then we have what a shooting star. So remember that in trading, you're not finding your entry at a particular price point, but you're finding your entry in a range or in a zone, right? So all these places could be what your short zone, right? Your short zone based on what the kind of confirmation that is going on within this range. So you want to see what make sure that you find your entry within this range. The stop loss obviously above the range before the move sets in. And obviously before that move is set in, you face a whole lot of gyration, right? Which is what that up, down, up, down, up before a move comes down, right? But with patience and then with practice and then with experience, you get conversant with having that necessary patience needed to carry you across. Right? Yeah, somebody says what? The French minister wasn't a bearish. Yes, it wasn't a bearish stick, but indeed it still was a shooting star, right? So that's what I'm saying that what now you know that it was a shooting star, but it wasn't a bearish stick. So what do? It means that it hasn't given you enough bearish presence to want to start acting on it. Doesn't make sense. So you always want to find that bearish presence in that bearish range or bullish presence in any bullish range before you want to act on or take a decision on, right? If we come to the next zone here, I don't know why my eraser tool is delaying. So try cleaning, it delays a bit before it closes. It cleans. Anyway, let's go on. So here, a tricky thing, because if you're looking at here, this thing wouldn't go. If you're looking at here, you can clearly see how we smashed through with a strong bearish candle and quickly shifted back in with this bullish candle, another bullish one, bearish one. So somewhat what a very difficult area or zone to find a trade-off, especially by the fact that what the kind of candlestick patterns that are going on are very huge. And then these candlesticks you're seeing have huge pips, right? They have huge pips. If you calculate just even this one here, this single one here, all the way to the very low, that's about 60 pips already, right? So even if you're watching these candles trade up, down, and like I'm saying, let's say all things being equal, you found your confirmation for an entry here, and then you have to put your stop loss beneath the range, then it becomes somewhat of a huge risk to take because from that entry point onto from that entry point onto that low there is about at 80 pips already, right? Which is somewhat huge. Unless of course you want to put your stop loss by your own designated pips, right? Which is sometimes a little bit risky because it is not safe enough because there could be some sudden spike from nowhere which will take you out before the trade even goes in a direction, right? All I'm saying is let's say you decide to take an entry here right after maybe this closure, and then there was this big spike here, maybe your stop loss was just here. This big spike came to take you out, and then they ran back up before the trade continued. Right. So always it's safe to put the stop loss beneath the range, but sometimes certain market formation don't give you that succinct stop loss in pip, which will usually range from maybe 25, 20, 30, 40, maximum 50, right? Usually maximum I recommend a stop loss in pip for this kind of setups of what 50 if you're dealing with currency pairs. If you're dealing with commodities, if you're dealing with gold, then it varies. Sometimes those are very expensive to trade, right? So we come back to this setup here, which I showed you, right? Obviously, the confluence for this setup was these tweezers here, right? Even though it wasn't the perfect for tweezers because I'd have expected this body here to come and close a little bit beneath, right? But it came very close to that, so I regarded it indeed as a tweezer. Why? Because look at the continuous bullish move we made here. Bullish, bullish. So 1, 2, 3, 4, 5, 6, 7, right? 7, 4, 28. Or am I wrong? 10 times 4. Yeah, indeed, 20. So we spend basically 28 hours on a strong bullish momentum. Then on the next 4 hour, a strong bearish one just comes to almost equate this bullish one. Right, look at what happened here as well, right? Almost similar pattern before that major reversal. And then we have another similar pattern like that. And what do you expect? What based on that tweezer formation that I've taught you, what reversal. So here, even if you're not confident enough that what this is what enough of a signal for a shot, then you wait for the next session. What would you have this doji here, right? If you're still not convinced enough, then what do you have this sort of a shooting star here, which what comes close to these opening of this bullish candle, right? And then you should be convinced enough at this point after what this big rally here, right? That you've had a tweezer, doji, shooting star. You take the short, the stop loss above the range, and then subsequently what happens? Even if you're not convinced here enough, subsequently you have this bearish candle again. So yeah, if you don't take this trade, then you just don't want to trade, right? I think you just don't want to trade if you see based on what you've learned here, then don't take. But remember that it has to come in confluence with what all the things that we've learned. So you don't want to take trade blindly, right? So one rule of candlestick pattern is that it is more important where something is than what it is, right? Remember that is the rule of thumb. You just don't want to jump in trading anywhere at all just because you've seen a doji here, just because you've seen a shooting star here, right? Like maybe I see this one, I say, oh, this is a shooting star, Kojo taught me shooting star. So let me start shorting. Fine, you may make some pips, but is that a valid entry criteria yet based on what you've learned? Or you say, oh, this is what a doji, this is whatever you want to say, this is a bearish engulfing. So let me take those trades, right? Somebody says my eraser is wearing out. How can my eraser wear out? This is just what's it? It's just a computer thing, right? It can't wear out like the regular eraser we buy from the public. It's just the internet messing up or something. Anyway, yeah, so don't trade blindly. Don't just pick any trade anywhere, just because you see what a bullish candle here, a bearish candle, or you see a doji here, shooting star. Make sure they come into any one of the zones that we are particularly interested in before you read price action. So like, yeah, it's a very strong rule of thumb. Don't trade blindly, guys. Don't just jump in the trade just because you've seen something anywhere, right? I'm trying to like now do a back test. My internet is pretty slow today. I'm trying to now do a back test. for us to consider some more scenarios and then see how decision could have made based on what those kind of setups. I don't know, like I said, I can't tell why my internet has decided to act extremely slow this evening. Hopefully it doesn't repeat. It doesn't continue when market opens. Let me switch to a different currency. It keeps messing up. I'll restart, but when I restart, it means everybody has to join back again. Let's hang on for a while. You may be fortunate for it to come. Okay. Yeah, so if you look at a setup like this, right, even if you're considering this one that we've been talking about since, right, point one, point two, point three, even if you're considering this as a fake retracement, right, here to here, you can see what started rejecting in between what the 61.8, 70.6 retracement. At the same time, we're hitting what the market as a fair touch, right? Then subsequently, what do we want to do? We want to read into the candlestick patterns in that range, right? What can you see? We made what this kind of a strong bullish move and a subsequent another bullish one, and then what quickly reversed with sort of a shooting star, and then we pushed up again with a bullish candle. Subsequently came to close with a tweezer top, right? This one is a strong confirmation for you to start thinking about going short, right? Right after that, even if you're not confident with the tweezer top, subsequently, what do you have? You have what this hanging man here, right? And then followed by what this doji again. If you still didn't have a confirmation strong, then you have what, another bearish candle. So if you stay there before you realize the market has already traded down here, and then you're still wasting time and then finding confidence, right? So yeah, once you have some confirmations, right, one, two, three, strong enough, you want to quickly take that short to stop loss above the entry, and then let the market do the rest of the hard work, right? Pretty easy, right? Equal body. I don't really look out for the wicks, right? For the candlesticks. I particularly for the tweezers, I particularly look out for equal body, not the wicks anyway. Not the wicks. So with everything that has been said, then you should start seeing the light, right? And then start making some sense out of how the market just operates, how the market just trades, and then you should start like envisioning trade setups, right? And indeed, you should also start being able to take some solid trade setup based on all we've discussed, right? When every confluence plays across in your favor. And then when you do place those trade setup, you should have the confidence and the patience to hold them and capitalize on the real move, right? I'm taking one or two more scenarios, then we go into
talking about the fundamentals, then quickly we jump into the foundation course reference. The this thing is extremely slow now, right? What I'm going to do is I'm going to restart the internet, right? If you guys don't get connected, I'll repost the link in the group, then you join. Otherwise, we're going to waste the whole day, just the whole night just waiting, right? So I'm restarting my internet pretty soon.